Welcome to my VelocityBanking.com channel and website dedicated to helping you get debt-free faster using the Velocity Banking strategy. If you haven't already done so, head over to the site, myvelocitybanking.com. Join up. It's free to register and you'll get all the benefits of figuring out how to actually implement the Velocity Banking strategy. Now, if you're new to the Velocity Banking strategy, I'm going to put some links in the description as to other YouTubers who do a pretty good job of explaining what the strategy is and how to take advantage of it. Now, once you're familiar with it, then you can actually use this site to implement the Velocity Banking strategy. So today we're going to be looking at one of our users. His name is Bob. So Bob ran into an issue with the Velocity Banking strategy, and I'm going to go through that because they may apply to other people in his situation. So here's Bob's dashboard. We see his income, his expenses, his cash flow, which is pretty low, and his debt, which is about average. So here's the problem that Bob ran into. So he went in, he entered his information, he entered his income, he didn't put any of his household expenses, but then he went right in and he put in all his debts. So he has a mortgage, he has a Citibank credit card, he's got an Amex credit card, he owes his grandparents some money, car payment he's making, and some medical bills he needs to pay off. So after he entered all that information, he went to Get Report, which again, what the website does really well is that it analyzes all your debt and it kind of breaks it down for you. And then he gives you a personalized plan as to what to pay and when to pay it. Here's what Bob ran into though. He didn't have enough credit limit to actually make any chunk payments based on his cash flow. So this is a common scenario with people who are pretty close to the limit on all their credit cards. So they pretty much maxed out their cards, so there's no room to do anything. So you can't even start Velocity Banking until you make more room on your credit card. So what Bob did is that we told him to call his bank. He called his bank, asked for an increase, and they said sure. So this was the before and the after. Amex had sure, and they increased his credit limit to $5,000, which is pretty good. So now he's got more room to actually start Velocity Banking. Again, the debt payment's the exact same. So now we see he can actually start Velocity Banking. Based on his cash flow, this is the regular payments he makes. The chunk payments he makes every 12 months. So for his first chunk, he could pay off his grandparents, grandma and grandpa are like happy, they got their money back, and that it immediately increases his cash flow by $200 a month. And then he takes a big chunk out of his medical bill, almost more than half. He could pay that off with that first chunk payment, and this is all that's left. And then for the next 12 months, now this site is pretty conservative. There's a lot of padding built into it. So it's saying for the next 12 months, but really it's not going to take him 12 months at $50 a month payments to pay off $220. It's not going to take him that much, but that's okay. So he did that and he ran into the next issue. So he paid off the grandparents, he paid off almost his entire medical bill with the first chunk. But here's the problem. To get to the next chunk, he needs more room on his card. He can't do any more until he talks to the bank and he tries to get more room on his credit card. But once he does that, then he can actually continue paying the actual chunk payments. So we'll see that when things are paid off, the cash flow increases and you can make bigger chunk payments. And with bigger chunk payments, you can pay off your debt faster. So his Toyota, his car, he could pay that off in about 5 months once he gets the increase from his bank. And then he could tackle the Citibank credit card. Again, same deal, 1 month, one big chunk payment, and he gets that paid off. So in less than a year, because this number is a pretty conservative, more realistically in about a year and a half, maybe less than a year, he can pay off all those three debts. His grandparents, his medical bill, and his car payments are done based on a starting cash flow of only $315 a month. Then once that's done, he talks to his bank again. Again, in about a year, he calls his bank and says, listen, can I get a cash increase? An increase to my credit limit. Bank hopefully will say yes, seeing how the track record track record of him paying off all these debts pretty quickly, banks will probably say yes. So he gets an increase. Again, it tells you how much more that you need. So based on that, he does the cash payment, then he does the chunk payment, and this is to pay off his mortgage. So he starts paying off his mortgage every chunk payments, every 12 months. He's doing chunk payments, and that's the same. And finally, he gets his house paid off. So $200,000, over $200,000 of debt in about 8 years. It may be less, depending on how soon he can get the bank to increase his credit limit. And that's with a starting cash flow of only $215. So again, Velocity Banking works in any situation. You just have to have the right tools in place to actually take advantage of it. So if you haven't already done so, make sure you subscribe to this channel, because we're going to be running a lot of scenarios that apply to a lot of people, and hopefully it'll apply to you as well. So make sure you subscribe and then hit the like button if you like this video, and we will see you next time.